Good morning, everyone. This is Doug Campbell with Right Way Options with your morning market preparation video for November 28th, 2017. So yesterday was Cyber Monday, and everybody was apparently focused on shopping. There was really very little activity and light volume in the market most of the day. That was kind of expected. First, we had folks probably extending their vacations over the holiday, but everybody seemed to be focused on that Cyber Monday day. And according to the numbers, we hit new record spending. The American consumer is strong and very alive. They must have had those credit cards smoking hot because the sales numbers topped 6.56 billion, a new record high for spending on Cyber Monday. So the airwaves or the internet must have been completely abuzz with nothing more than sales going on. And boy, if you're a shipper, FedEx or post office or something, they are going to have a few busy days here with that kind of sales going on online. Overall, the market was a little bit disappointing in the way it acted. We started up yesterday, and then we ended up whipsawing. And it's something I mentioned yesterday to be careful of, is that potential whipsaw. We move up and then whip it all right back down. So those who chased in early in the morning, early in that run, during the morning push up there, probably feeling a little bit bruised, a little concerned maybe about some of their positions. And that's one of the problems when you deal with a light volume market and those potential whips. So now as those credit cards begin to cool down, from Cyber Monday sales, we're really heating up on the battle, getting ready to kick into full swing on the tax plan. The president is even working the Hill today, trying to garner enough votes to move that bill forward. Clearly, it's going to be a battle royale, and anything is possible. So be very careful. I suspect the market will be tremendously sensitive to news out of Washington, D.C. If the tide starts to swing to the side it's going to fail, we could easily see the market react very negatively to that, and in a real quick move. So watch that stuff carefully, and plan accordingly. The last thing I think you want to do is be overly long or overly short a dull market. Now, first off, trends are up. I wouldn't be short at all, but you could be hedging your account with a little bit of short. Just don't overdo it, because we're kind of in a dull phase here in the market, and which means we have about a 50-50 chance that we could swing either direction. So be really, really careful on how you plan and go forward. It's just not a good idea, I think, to load up on one side or the other right now, because the swings could be really quick. They could be severe, depending on how that vote starts to stack up in Congress. Let's take a quick look at the SPY hanging out here. Moved up nicely, but then pulled back just like everything else, leaving a bit of a spinning top candle here, a little bit of a questionable move. And now we're getting that gap up this morning, mostly on the back of, those big sales numbers. And I should go back here. The diamonds, you can see the diamonds potentially gapping up near that high yesterday. So nothing huge, but we do have the potential of those bulls coming back in based on those sales numbers. And now we're going to be subject to that real whippy potential price action as the spin doctors in DC, pump out the news on this tax plan. If we take a look at the Qs, the old NASDAQ here holding up, the strongest of the bunch, staying very, very bullish here in its trend. Just little tiny doji here. We really didn't move at all yesterday, just kind of seesawed back and forth yesterday in there. And the IWM just chose not to participate at all, pulling back to the support area here of this big box. And we'll have to wait and see if it can respond off of that or not. This morning we're seeing a gap up here, but nothing significant in IWM. So still a lot of questions. I think caution is warranted. Be careful not to be over long or over short. If we take a look at the VIX here, the VIX, the VIX still down here at these very low levels, but we did get a little bit of a follow through here yesterday off of that big hammer that was drawn on Friday. So keep an eye on this. I think we could be very subject to those big swings. So just keep an eye on it. There's no particular threat here just yet. It's just when you have a dull market, light volume kind of dull market, you want to be a little bit careful and not picking, trying to guess the winning side, I guess, to say there. Be a little bit cautious on how you move forward. I guess the best way to say that is don't force trades. Wait for the trade to set up. Make sure it's there. Make sure you have a good trade plan on it. Make the trade come to you. Don't force a trade. I know it's hard sitting in front of your computer. You want to trade. The market is out there and moving, and you want to be in the market. I get that, but the last thing you want to do is be forcing trades in this market, in my opinion. Let's take a look on the economic calendar here. The economic calendar this morning, we've got international trade here at 8:30. We've got the Case-Shiller housing number at 9 o'clock and consumer confidence at 10. We have a few other reports in here. They're really non-market moving reports to be aware of. And then also keep in mind we have two Fed speakers speaking today, so you'll want to kind of, and those are during market hours, one at 9:15 and one at 10. You might want to stay focused on those, because I think largely the market is expecting a rate increase in December. If they say something that would be different than what the market is expecting, we could, the market could react to that both bullishly or bearishly. So kind of keep an eye on that. On the earnings calendar, we have over 40 companies, about 46 companies reporting earnings today. And when we look at those earnings numbers, good deal of them are coming this afternoon. So kind of keep an eye on those earnings reports. They're still very, very likely to force a market around. So be careful. Probably one of the bigger ones that I see for today would be ADSK, Autodesk. That's going to be, on the tech side, could be a big earnings report. That's this afternoon after the close, as well as AABA. AABA could report reports after the close today, and that could certainly move this stock around as well. So kind of keep an eye on how this market is going to react to these news reports. Other than that, everyone, I want to say be just a little bit cautious as this battle heats up in Washington, D.C. Just expect the market to have some sensitivity to the news. And obviously that's nothing we can control. The market could flip and reverse very quickly, either side, Either way, if the votes start coming in that it's going to pass, the market's probably going to love that. So, it could flip either way. So be a little bit cautious and realize that we might be a little bit sensitive to the news. Hey, everyone, have a great day. I want to wish you all great success. And if this is the first time you've seen this information, please do me a favor. Click the subscribe button there on YouTube and the follow me button on Facebook. Click those thumbs up buttons. I really do appreciate that. Thank you very much for everyone who does. And also, please feel free to always share this video with friends and family if you think that can be helpful to them. Everyone take care, and I will talk to you all again first thing tomorrow morning.